Hey guys, in this episode, I'm going to analyze a couple of Melbourne suburbs that look to be at the bottom of the market and about to boom. Stick around, I'll show you where these are in a moment. First one is in a growth corridor called Officer. It's southeast of Melbourne CBD, so Melbourne CBD is up here. So you're about an hour outside of Melbourne CBD here in a place called Officer. And I'll show you why this market looks like it's about to boom. So typical buy price is about $800,000. Rent $489 per week, yield is 3%. So the main things I'm going to focus on are the price graph. So let's just zoom in and have a look at the graph. So Officer looks like it hit a peak in about mid 2022 rather, in this graph, which means that it's been in stagnation, so it hasn't done anything for the last couple of years, and it's just started to uptick just in the last quarter. So you can see that there, it's gone from 812 to 813. So it's just started its uptick. Now, if this continues for the next couple of months, it's fair to say that this suburb is going to be in growth. Now, it is a suburb that is currently in slight oversupply, but it looks to be at the bottom of the market. So let's just scroll down and have a look at what the supply and demand looks like. So from a supply and demand perspective, you got a fair bit of stock on market, 1.52%. It's not terrible. I like to normally look for below 1% is fantastic, but anything below 2% is still pretty good in terms of stock on market. But the thing that's most worrying is the inventory in this suburb. So it's at 4 and a bit months. So in other words, the stock that's currently on the market will take 4 and a bit months to sell, according to this. Now, the other concerning factor is the number of building approvals. So there's 7% building approvals, 638 approvals. The suburb's got around about 10,000 homes. The days on market is actually quite low for a suburb with this much supply. It's actually quite low. So this to me says that there's still demand for this area. It's 35 days on market. The vacancy rate is still relatively low, 1.7%. Don't worry about the clearance rate because this isn't an area that's typically bound by auctions. It is on the outskirts. It's in a more affordable area, which means that buyers are more leveraged, so they need to go to the bank to get finance. But the supply demand, other than the building approvals, but what's going to happen over the foreseeable future is people move into the area. The demand continues. The supply with the building industry that we're in at the moment will get taken up. Those building rates are going to increase because the cost of building is still increasing, which means that even the secondhand homes are going to increase in value. So watch this market over the next 6 months. If this starts to uptick in terms of price, I'm going to scroll back to the pricing graph. If this continues its upturn for the next few months, it's fair to say that this suburb is going to enter into a boom phase, and that generally lasts for 2 to 3 years. You just got to monitor that supply and make sure that the market isn't being oversupplied into the future. But it's easy to say that that supply, providing there's not a heap of supply, new supply coming online, that supply will get taken up over the next 4 months, according to this. And then you've got obviously the building approvals, which are going to be completed over the next 6 to 12 months. So I'd say that this suburb, just looking at this at a high level, looks pretty good or pretty well positioned to be in a growth corridor for the next few years. The next suburb I'm going to show you that looks to be about to boom is the suburb of Burwood, and its surrounding suburbs as well, but I'm just going to focus in on this particular one for now. So we're east of Melbourne CBD in more affluent suburbs. So if we scroll down, we're going to have a look and see that the typical buy price is nearly $1.5 million. So it's not a normal investment area, but if you're looking at buying a house or home ownership, this is an area that looks to be on the up. So you got pricing graph. It hit its peak in around about late 2021. The price hasn't moved for the last 2.5 years. So it's been in that stagnation phase for 2.5 years. In terms of real property values that actually declined due to inflation. So when you take into account the inflation over the last few years, property values have actually declined in terms of real value. So it's due for a boom cycle just on that alone. However, it started to uptick the last quarter. So you can see we've gone from 1.462 over to 1.469. So it looks to be at the early phase of entering into the growth or the capital growth phase of this market, which generally lasts for 2 to 3 years. If you just scroll down, have a look at the supply demand, this looks to be pretty good. We've got 14 listings on market, so 0.4% stock on market, so there's basically no supply. It's only going to take a month to sell the supply. We've only got 1.5% building approvals, so which means that these are going to come online anywhere from the next sort of 6 to 12 months. It's got a really long hold period, 14.5 years, so people don't sell in this area, so it's obviously really tightly held. The demand, so that's demand for the product, days on market is 25, so anything less than 30 is generally a hot market. So when this market starts to heat up and prices start to increase, this market, I believe, will enter into a 2 to 3 year growth phase. We've got low vacancy rates, so all the indicators look really good, or at least the ones I'm showing you. There's other indicators that I'm not going to consider in this video, but all the indicators look really good for this suburb to be positioned to boom over the next couple of years. We'll just have to wait and see what happens with the pricing graph over the next few months. If it continues to incline or increase, that generally means that we're into a growth phase. And with everything else happening in the economy, with interest rates positioned to decline into 2025, this will also add more demand into basically every market around Australia. So if it's going to add more demand to a really tightly held market like this one, and it's been in stagnation, prices haven't moved for 2.5 years, I would put money, as not that I'm a betting man, but I would put money on this suburb going through a boom cycle over the next few years. And I've seen this for a number of Melbourne suburbs, not just this one that I'm looking at. They look to be at the bottom of the market or very close to the bottom of the market, about to come out of that. So we might see another 3 to 6 months of fairly stable growth, maybe zero growth, but then we're going to enter into a boom phase, in my view, for a lot of different Melbourne markets. If we have a look at the entire council for this area, and we have a look at typical house prices, you can see 2021, that was where Burwood hit its peak. So then 2021, in terms of the whole council area, it looks to have some very modest growth over the last few years. But again, in terms of real property values, by the time you minus inflation, these have basically stayed at zero. So there hasn't been any property growth since the end of 2021 or early 2022. So we're due for a correction in this market, and each suburb is going to perform differently. This is just a holistic view of the whole suburb to see what else we can gather from this information. So that's the pricing graph. I'm just going to scroll down to the supply and demand for the whole suburb, because that does, for the whole council region, because that does feed into the suburb itself. So you see very low stock on market. I've only got 162 listings, so low stock on market, only 1 month of inventory left, really high hold period. Sorry, I'll just scroll down. So low stock on market. The inventory is only going to last for 1 month, so that's the stock that's on the market is only going to take a month to sell. The hold period is only 15 years, which means it's really tightly held. Less than 1% of building approvals, which means there's hardly any new buildings coming to market in this area. Then you have a look at the demand. The demand is 26 days, really tight market, so it's sub 30 days, which is a really, really tight market in a capital city. The clearance rate is high, 74%. So all these indicators are showing that the supply and demand are both really tight. So there's high demand, there's low supply, and that's only going to put pressure on pricing, especially as interest rates start to come down for this area. So it is a more affluent area. It's eastern suburb of Melbourne, but many Melbourne suburbs and areas look to be at a similar time in the market. In other words, they look to be at the bottom of the market. Now, this isn't across the board, but this is just what I'm noticing in certain areas. My name is Adam Panisi. Hit that like and subscribe button, because I talk about making money from property so you can retire early and not have to follow the 30-year mortgage plan. I started off in property when I was 22 years old, and now I've got a couple of hundred property deals currently active.